always compare it to wine. To give you an idea, the role that Crunch Carbon really does play is, imagine if the vineyards is all the solar systems in South Africa. Now, our responsibility is to go pick the grapes and make the wine, because not everybody's great winemakers, but everybody can grow or use green energy. That's what they're good at. So our responsibility is literally to go pick the grapes. We press it, we put it in a barrel, we let it ferment, we then bottle it, stick a label on it, and we sell it. And that's what we do really well.
Because we also have a big challenge around greenwashing. So if we actually aren't going to get it verified and done properly, we then have a potential of a lot of fake carbon credits that are then out there, but they're actually not offsetting anything.
The private sector is central to scaling carbon credit generation in South Africa. Government can create the enabling environment, but it's really private developers, financiers and corporates that bring these projects to life.
The full transaction, the full life cycle of that carbon credit. So from green energy to a tradable commodity, which then has turned into cash.
Welcome to the Energy Conversations podcast, your go-to source for unpacking the complexities of the South African energy sector. Welcome back to Energy Conversations, where we break down the complexities of the South African energy sector into digestible insights and make sense of South Africa's energy transition through stories of innovation, inclusion, and resilience. I am your host, Thokozile Zambane, and in this episode, we explore a growing frontier in climate and energy finance, carbon markets, and South Africa's evolving role in the global carbon economy. From tax policy to trade regulations, carbon markets are shaping how we think about emissions, energy, and opportunities. But what do they actually mean for South African businesses? And how can they help us achieve an inclusive low-carbon future? We are joined by two leaders navigating this complex and fast-changing space. Marike Wilson, who is the CFO at Fibon Group, a company driving innovation in energy access and private sector energy solutions. Shaun Slabber, who is the co-founder and CEO of Crunch Carbon, a firm helping businesses monetize clean energy through verified carbon credits. Before we dive in, let's begin with a quick introduction of each of our guests and understanding what their role is in the South African energy sector and how it connects to carbon markets in South Africa today. Shaun, if I can begin with you.
Thokozile, thank you very much for your time. Really appreciate it. I am Shaun Slabber. I'm the founder and CEO of Crunch Carbon. We are a South African business turning clean green energy into cash by helping homeowners, farmers, and businesses to earn revenue through the carbon credits process. My background is originally construction, transitioned over to renewable energy, and ultimately a bit of an entrepreneur. And I really try to bring practical kind of business sense and vision to kind of the impact or the climate impact space, really. Yeah, I'm really passionate about making things very simple, transparent, and easy for everyday solar users within the carbon economy. And yeah, that's me.
Perfect. Thank you so much, Shaun. Marike, if I can ask you to briefly introduce yourself.
Sure. Thank you, Thokozile, for having me. My name is Marike Wilson, and I'm a chartered accountant by trade. I spent the first 10 years of my career in a listed financial services group, starting in finance and later focusing on integrated and sustainability reporting. During that time, I helped build out the ESG framework and worked on quantifying and reporting the company's impacts. For the past 3 years, I've been CFO at Fibon. Founded in 2013, Fibon develops and funds renewable energy projects, mainly solar and battery storage. We provide medium to long-term PPA funding, and over time, we've naturally expanded into the carbon credit market.
Thank you both for your introductions. Let's start with the basics, because for many people, carbon markets still feel like something that's happening somewhere out there in international negotiations or corporate boardrooms, but they're becoming more relevant to everyday business decisions in South Africa too. Shaun, I'd like to start with you. Let's keep it simple. What exactly is a carbon credit, and how does a carbon market work, especially in the South African context?
So trying to keep things quite simple, very simply put, whenever you use, and I'm going to stick to the concept of solar, it's nice and easy. When we look at solar, every time somebody uses solar energy rather than energy from the grid, which is coal generated, or worse comes to worse, diesel kind of generated, that is how clients effectively start offsetting energy, because they're not using the dirty grid energy, but they're rather choosing to use clean green energy. And that really, in a nutshell, is how a carbon credit is kind of generated. It's that process of offsetting the dirty energy versus the clean green energy. So, and ultimately, a carbon credit, then you end up with a commodity, which is a tradable certificate. And that tradable certificate effectively just represents a metric ton of carbon dioxide emissions, which was avoided or removed from the atmosphere. And that really is the long and short of it, really, not to kind of try and make it overcomplicated. And I think in the context of the South African market, it's becoming more and more important to really kind of understand what the impact is, and especially in exports, carbon taxes that's coming into play into South Africa. And we're going to find a lot of these, the demand, I mean, I think just the demand is currently outstripping obviously what is availability in the market, and it's specifically due to the heavy emitters like the Escoms of the world, mining houses, cement, steel, etc. And at some point they're going to be liable for taxes. And really, this is where the market is created from, where people that use green energy can then create these carbon credits, and they can be sold as these tradable commodities into the market. And ultimately, that is really where that plays a really big role for us in South Africa. And the South African Revenue Service has worked really hard to put the Carbon Tax Act in place, the 2019. And yeah, it is really where the market has really kind of found a good solid foundation on to start off from. So yeah, that's really it in a nutshell.
Perfect. Thank you. Thank you so much for that. It gives a good foundation, and it also answers the simple question, or the big question, of why now, why carbon markets, and why South Africa, because there's actually legislation now. There's also the fact that we are large, we've got large carbon emitters in the country, and we really do need to be offsetting that. Marike, I'd like to bring you in and trying to understand, what drew you into carbon markets, and what made you believe that this was a critical part of South Africa's energy future.
So for us at Fibon, getting involved in carbon markets felt like a natural next step. We've been in the renewable energy space for a long time, and one of the challenges we see is making projects financially viable at scale. Carbon markets help to bridge that gap. They bring in an extra layer of revenue that can unlock projects that otherwise wouldn't have been built. What excites us, though, is that it's not just about the emissions. Done properly, carbon projects can support local communities, it creates jobs, and it brings real on-the-ground benefits. So, for example, renewable projects under a PPA, they don't just cut carbon, they can lower electricity costs, they stabilize supply, they improve resilience for businesses and farms. If you think more further afield, land restoration projects often employ people from nearby communities, sometimes in areas where there aren't many other opportunities. And then there are the co-benefits. So restoring these grasslands or wetlands, it helps biodiversity and improves soil health. And it can even support water security, which we all know is a huge issue in South Africa. So yeah, the impact is twofold. You're addressing climate change, but you're also unlocking jobs, skills development, healthier ecosystems. So that combination of environmental and social value is something we're really excited to help scale. And we also believe carbon revenues are going to play an important role in South Africa's energy future. They can make the economics work, and that helps attract private capital into the transition. For us, that's where the real opportunity lies.
100% agree. And I think I love the point that you're also making in terms of the economics of these projects, because it does make a significant impact. Because obviously, when you've brought in carbon credits, that increases the equity IRR, I'd imagine, and that obviously makes the project a bit more attractable from a bankability and a funding perspective. But then it also, enables the project to perhaps do more, so now that you've actually been able to have some savings. And I think especially I like the point you're making about the socioeconomic development opportunities it presents as well. And what we know is, when you look at the socioeconomic development opportunities, it does come at a cost. So that's why it actually becomes a bit challenging for for companies to maybe, fully put their weight behind it. So kind of balancing it out with carbon credits actually could be a really great opportunity. I want us to, Marike, and just continuing with you, I want us to zoom out a little and look at South Africa's positioning globally. There's often talk about Africa being carbon credit rich. What does that actually mean in practical terms?
So I think South Africa has a very real competitive advantage in the global carbon economy. And it comes down to a few things. So our renewable energy potential is world class. The solar and wind resources here are some of the best. And because our grid is still so coal heavy, every unit of renewable energy that comes online displaces a lot of emissions. So that makes South African renewable projects particularly powerful from a carbon credit opportunity and perspective. We've also got vast landscapes and unique biodiversity. So again, think of grassland restorations, backbone projects, wetlands. All of these are proven carbon catchers. So if you link that with the community ownership and job creation, which is critical in a country like ours, you get credits that not only reduce carbon, but it also has a strong social impact story. South Africa also has a large industrial base, mining, steel, cement, and also big methane emissions from landfills and wastewater. So reducing those emissions are also hugely valuable. Then, of course, there's a potential around green hydrogen and synthetic fuels. I mean, we've got the renewable resources, we've got the coastline, we've got decades of process expertise through companies like Sasol. So that positions us well to export these low carbon fuels. If we can package all of this properly and couple it with a clear just transition narrative, South Africa can establish itself as a credible supplier of high quality, high impact carbon credits. I think the key now is aggregation, standardization, and policy certainty, just so that the world sees South Africa as a trusted market for carbon solutions, not just another project developer.
I guess, South Africa really does have a genuine competitive advantage then in the global carbon economy, and almost an enabling environment that enables us to actually be able to leverage it. Quite exciting times ahead. But let's bring in then, the global policy side as well, because obviously these markets don't exist in a vacuum. And one big factor shaping the future of carbon exports is regulation, especially from trading partners like the EU. And Shaun, I'd like to hear from you. With international policies like the EU CBAM coming into effect, what are the real implications then for South African exporters?
Let's just give a quick rundown of CBAM. It's not the easiest thing to deal with, but CBAM stands for the European Union Carbon Border Adjustment Mechanisms, and it's effectively a carbon tax at the borders. So if you're exporting into the European market, you will be held with a carbon tax for the emissions on the goods produced. And I think it's effectively a way for the European Union to really kind of like look at us and say, listen, your country doesn't price for carbon and we'll do it for you at your border. So that's kind of like, a bit of a easy way of applying it to countries like South Africa. And I think if we kind of look, what is the impact on South Africa in general? Because we obviously coal powered, it means any of our exports are carbon intensive. It doesn't matter if we're doing cement or mining exports. We unfortunately just get looked at a little bit with dirty looks, to be honest, and we will attract big CBAM charges. And ultimately, it's going to make our product into the European Union much less competitive, a little bit more expensive, especially compared to countries. Norway is a good example. I mean, their clean hydro is... Nobody can compete against that. We can unfortunately no longer hide behind the narrative and story of South Africa because we have weaker carbon kind of structures. It's now becoming very evident and that we really truly need to step up. So yeah, there is going to be very real implications for South African exporters. Highest cost to kind of export to the EU market is likely to have quite a significant impact on the exporter market, because the question that we need to ask is, the EU buyers willing to absorb that additional higher costs? Very unlikely. And I think this is part of the reason to really start adopting the kind of green energy, and I think Marike mentioned the just energy transition kind of business impacts at large. So companies can really kind of start looking at that and says like, listen, we need to really embrace this new future, because it is going to potentially impact our future revenues. And I think it's not just those aspects. I think a lot of other aspects comes into play when we start looking at, the EU would be looking at the credibility of those things and the overall putting pressure on us to decarbonize full-blown supply chains in the country. And I think as much as it is just initially going to impact high costs, I think there is also a positive side to it where it really does force the South African market to truly embrace offsetting carbon, bringing in, and it's not just solar, there's other aspects to this, looking at your full value supply chain. But I think it's going to become more and more important for South African business to really focus on lowering their carbon footprints, which ultimately then gives way to the carbon market at large. The first movers in South Africa would certainly be the companies that adopt renewables. That's a fairly quick win. And working with a company like Crunch Carbon, we can then certainly obviously take you through the vetting process and make sure that you get the Vera registered auditing, tracking, certification of that emissions, etc. Because that becomes really, really important. The credibility of the carbon credit that you put through in the market. We've dealt with some fuzzy gray things out there before, but I think it's really important to really do focus on starting this journey and becoming a little bit more lower your carbon footprint. So yeah, it is going to have a very real impact on exporters.
And I guess it, as you're saying, it makes the transition real. We can't run away from it. You can't, as much as we're saying we're a coal-based country and a lot of jobs, and there's obviously a lot of impact that we really do need to transition, and there's a lot of pushback on it. The reality is we have no choice. Because if we aren't actually transitioning, if we aren't really looking at, bringing in renewables on board or looking at, other opportunities, then we actually are going to be stuck in a bit of a tight squeeze, especially then for our exporters, as you're saying. And I guess that also does create opportunities. I think, often when we think of challenges or when we think of things like this, we often look at the negative, but it also is about looking at, okay, but what opportunities does it actually create? And I think often, there's untapped potential that sits closer to home or in sectors or geographies that are underdeveloped. And Marike, I want to bring you back in and just really get a sense from you, in terms of which sectors or regions in South Africa are actually best placed to generate carbon credits and which are potentially still being overlooked.
Thanks, Thokozile. Yes, I'd say there are 3 areas in South Africa that are really well placed to generate carbon credits, and a couple that are still underdeveloped. The first is renewables and energy efficiency. Because our grid is so coal dependent, every megawatt of solar or wind that gets built displaces a high volume of carbon. A project here displaces more carbon than the same project in Europe, where the grids are already quite clean. Second is nature-based solutions. So South Africa has huge potential in land restoration, grasslands, backworm, forestry, etc. These projects can generate high-quality removals and also help biodiversity and bring real benefits to local communities. The third I would touch on is industrial abatement. So South Africa has a large mining and heavy industry sector, and also big methane emissions from landfills, coal mines, wastewater, etc. Abatement here can mean improving energy efficiency, switching to cleaner fuels, or even deploying carbon capture technologies in certain operations. So while these projects can be technically challenging, they have a big impact per ton of emissions avoided, and they can be very attractive to investors and buyers looking for high integrity credits. In terms of overlooked opportunities, I point to 2 areas. So agriculture is one. Things like regenerative farming, soil carbon, livestock methane reduction. These are in their infancy here, but globally they're scaling fast. I think South Africa has the scale and the technical expertise to lead, but it hasn't really unlocked this yet, I'd say. And then the other is provincial or municipal level aggregation. So right now projects tend to be very site specific. But if you could bundle, for example, a whole municipality's landfill methane projects or community-driven land restoration at scale, you'd start attracting much bigger international buyers.
Got you. Shaun, I'd like to bring you back in, and you're actively building or working on these carbon credit projects and helping clients unlock value in a very tangible way. What does a typical Crunch Carbon project look like, and how are clients then responding to the model so far?
Looks very sexy, let's be honest. So the market is reacting in a very positive way. And I think we've had two of the big four financials kind of sticking their hand up wanting to work with us. And I always compare it to wine. I think between myself and Marco, we love the wine analogies. It makes so much sense for everybody. But to give you an idea, I mean, the role that Crunch Carbon really does play is, imagine if the vineyards is all the solar systems in South Africa. Now, our responsibility is to go pick the grapes and make the wine, because not everybody is great winemakers, but everybody can grow or use green energy. That's what they're good at. So our responsibility is literally to go pick the grapes. We press it, we put it in a barrel, we let it ferment, we then bottle it, stick a label on it, and we sell it. And that's what we do really well. And that's kind of what we do. So that's kind of like that's our little analogy as Crunch Carbon, that we really work in, and we work in the same vintages as wine, etc. And we're really fortunate. We are knee deep in our first issuance as we speak. So we've gone through the dreaded validation of our project processes. We've done all of that. We've ticked the boxes. So we got our registered project that's over the line, and we've gone out to our clients. We signed them up. We've gathered the data and the information. So we've done all of that hard work, and we are now very lucky to be almost issuing our first issuance of carbon credits come October. So we're very excited about that. But a typical project for a farmer or a homeowner, which is quite unique to us. So we can actually, if you've got a 3.8 kilowatt peak on your roof at home, you can come to us and you can work with us, which makes it interesting. But also the C&I space. So anything from 0 to like about 15 megawatt peak, we can work with. But effectively, we would sign the client up through a bit of an onboarding process. We'll ask the client, how big is your solar system? When was it commissioned? Do you have a battery and inverter? How many panels? So there's a list. It's not the easiest list to work through, but it's a list nonetheless. We then ask the clients to sign our session agreement. And the session agreement effectively just gives us as Crunch Carbon the right to act on your behalf, to go make that wine, pick the grapes, press it, and then turn it into carbon credits for you. And then from there, we absolutely take it and package it, send it, and prepare it for auditing purposes. And we have we always joke around, but we just call them Sven, that comes from Europe, yeah, with his big green pen. And he's got to be placed through the paces, and he does put you through a rather aggressive auditing process, which is not a fun exercise, but very necessary, because that all builds up into that credibility kind of space where you need to work. Once the auditing verification process is done, that all gets submitted through to Vera. Once Vera is happy, they put their big rubber stamp on it, and they ultimately then issue us with our big digital carbon certificate, which means that the homeowner or the business or the farmer did exactly use those green energy. It's audited, ticked. We take that certificate, and we have one or two different players within the South African market that we actually then sell those certificates to. We do have some clients that says, no, we don't want to sell. You can keep a little bit of it, but we want to retain it, and we want to hold onto some of our carbon credits, which is the same, but a different model. And ultimately, we then share some of that revenue with the consumers as we go through the process. And that's kind of really ultimate what it is. I think we've had some really good reviews. Some clients were very happy. Other clients went, sorry, you telling me because I'm green electricity, you're going to give me money? It says, no, it's not just because you're using green electricity. You're actually doing really good things and offsetting energy. So we have some really excited clients just to get money back in the pocket. And we have some very sophisticated clients, like some of the REITs that we work with, who is obviously very focused on their sustainability reporting to their investors, who is obviously holding on to their carbon credits. But yeah, I think ultimately we're having very good feedback on that whole process. But happy to kind of say we've had really good feedback from everybody around, and looking forward to doing our first issuance come October.
Awesome. That sounds amazing. I absolutely love the wine analogy. I think it actually fully landed properly when you put it. Maybe I'm just enjoy my wine, but it really then does make sense. And I think it also, the process you're describing sounds like it is actually quite a critical process, because we also have a big challenge around greenwashing. So if we actually aren't going to get it verified and done properly, we then have a potential of a lot of fake, I would imagine, fake carbon credits that are then out there, but they're actually not offsetting anything. Marike, I want to just bring you back into the conversation and obviously, from a Fibon perspective, you do extensive work with the private sector. And I'd like to understand from you, what role can the private sector play in scaling carbon credit generation and what's holding the private sector back?
Thokozile, the private sector is central to scaling carbon credit generation in South Africa. Government can create the enabling environment, but it's really private developers, financiers, and corporates that bring these projects to life. There are a few main roles the private sector can play. So firstly, capital, deploying funding into renewable energy, land restoration, and industrial abatement projects that can issue high quality credits. Second, we have innovation and execution capacity. So here we're talking about developers, engineers, project managers who can actually design, register, and monitor these projects according to international standards. And then third, I think it's demand. So large corporates buying these credits, whether for compliance or voluntary purposes, which creates the certainty to build the supply. What's holding it back right now, I think, are a few things. So one is policy uncertainty. I think companies are still hesitant to invest too heavily until there's more clarity on how the domestic carbon tax and the international carbon markets interact. And then I think the second, and it's a big one, is the transaction costs and the complexity involved. So registering, verifying, issuing credits under global standards, it's technical and it's expensive. And that does create a barrier for smaller projects. The third, I think, is trust and credibility. So the market is very sensitive to quality concerns, as we just spoke about. So unless projects are designed with strong additionality and permanence, I think they'll struggle to attract premium buyers.
Perfect. Thank you so much. And really also, I guess my next question was going to be around what are the actual barriers then, or what are the obstacles that are preventing South African businesses or smaller players or new entrants from getting into the market. And really nicely highlighted, obviously, policy certainty becomes quite important. Shaun, I want to bring you back into the conversation, and maybe you can add to the conversation around what are the obstacles that you're seeing that's preventing specifically SMMEs from participating in the carbon markets. But I'd also like you to expand on what you've just touched on briefly at the end around you're about to do your first issuance and what that actually means.
Well, let's start with the first issuance. That's the easier question to answer. The rest is a bit more challenging. But I think from a first issuance perspective, what it effectively means is anybody that has signed up with Crunch Carbon to create those carbon credits for them, it effectively means that we have signed them up. They have signed a session agreement with us. We have harvested all of that rich information that they have, the data, energy consumption, system sizing, where is it located, and a host of other information around, and something as silly as serial numbers of solar panels, etc. So we've captured all of that information. We have then packaged it for the proverbial Swen to come from Europe and do an on-site audit. Swen does bring a green pen, just for the record. It's a true story. And effectively, he then takes that pack of information and he's very happy with that. And then he starts quizzing us on our methodology that we've put forward within our original submission and aligns that with the information that we've provided him within that first audit. And he basically just probes and pokes until he is 100% satisfied that what we have presented is 100% correct and credible. And then he will put his rubber stamp on. That whole package then gets sent over to Vera. Once it hits Vera's desk, they go through a secondary process, a secondary audit. And once that secondary audit is finished, Vera then issues to Crunch Carbon digital carbon certificates, which is then a representation of the energy that was offset and the carbon credit equivalent created for that. That issuance effectively is they issue that tradable commodity, which we then on behalf of the client either put into their either a Vera account or their COSA account. And from there, some clients would prefer us to sell it on their behalf. Then we transfer the cash and the revenue split as pre-agreed with them. And that's really kind of what that issuance component is really about. And yeah, I can speak for another 20 minutes on that, but we're not going to delve into that. But in a nutshell, it is effectively the full transaction, the full life cycle of that carbon credit. So from green energy to a tradable commodity which then has turned into cash into someone's pocket effectively, if that was it. You were asking about, how do we, like technologies and innovation and transparency and trust, how do we further build around that? I think a big part of it is there's obviously really high barriers of entry for everybody that plays around in the space. So it's the complexity, and Marike really did touch on that, where she actually mentioned, it's not the most not the most cost-effective kind of idea to go and register your own project, and it's part of the reason we exist is we bring the ability for all these players together to come to work with us. But the technical studies or audits, the registration fees, it could run into millions of rands. And for small SMEs, it becomes, it's really not feasible to even consider. And that's why they can come and play with us. So the administrative technical burden is really a big aspect to it. Like data collection doesn't sit in everybody's wheelhouse. Neither does the auditing, and kind of like sitting and managing Swen could be quite a heartache and pain. And I think generally just lack of awareness in the market is also a big issue. And then ultimately the scale component is quite an important aspect that we need to consider. Larger sizes attracts more work, etc. Smaller project, less work. So the smaller projects falls off the bus. So the smaller SMEs kind of miss out on opportunity. And we really wanted to position ourselves to be able to kind of really help everybody from the 0 to kind of 15 megawatt peak space. So yeah. And I think two last aspects is obviously verification is quite a high process to kind of get your head wrapped around. And Marike really kind of like nailed it. It's like, it's not the most easiest process to follow to get that verification and credibility process going. And ultimately just access to the market. Not everybody really truly understands it. And I'm quite lucky. I've got a Marco in my universe, and Marco has spent 12 years as the head of one of the big four banks, Carbon Desk, and he was an absolute, trailblazer in the sector. And I'm really like fortunate to have in my side of the team, and he's made that really easy for me and my skill set to really almost simplify things and distill it really into its kind of like bare elements. Has made it really kind of a good combination to take that to market, and we're hoping that market access is less difficult for players through how we've kind of like tailored our offering to the broader market. So yeah, that's really it in a nutshell. Again,
Thank you.
I've got many nutshells apparently.
No, you've actually covered so many of the questions that I still even wanted to ask. So thank you for that. Very thorough. Marike, I want to bring you back in here, and maybe when we go back to Shaun's analogy of there's these grapes that have been planted, he is effectively the winemaker bottling it. I would imagine Fibon is probably the farmer or supporting the farmer in kind of planting these grapes and in terms of the projects that you guys are working on. So how do you convince the farmer to give his wine grapes over? Like what does that process typically look like in your engagements with your clients? How do you get them over the line? As you said, it's a complicated process. It can be time consuming. It has its own cost implications. So what do you generally do or say to your clients to get them to buy into this?
So Fibon is a developer and funder of these behind the meter energy solutions. So we have our own in-house engineering, procurement, finance, legal, etc. teams. So we design the systems, we build them, and then we own them through a PPA agreement. So what we do in that space is we own the carbon credits associated with the actual solar installation. And we're actually, through our subsidiary Primary Carbon, we're also going through this process of registering a project with Vera and ultimately being able to monetize these carbon credits. So what we find is positive, clients are very positive when we reach out to them with this proposal. So what it does is it either adds an additional revenue stream to them, which they would not be eligible for otherwise. So we do offer them a portion of those revenues in that instance, or we use it to fund the PPA. So that's that carbon credit revenue provides an additional layer of revenue, and it ups the equity IRR and it makes the project bankable.
Thank you for that. Thank you. Looking at the future and looking ahead, what is actually possible, and if South Africa plays it right, and if we align policy, innovation, and finance,
there's that real community impact that we spoke of earlier. It's also a market that could unlock billions of rand in investments. So that capital wouldn't just fund the climate projects, it would create real jobs in rural areas, it would support skills development, and it would drive co-benefits like water security and biodiversity protection as well. We could also see the growth of South African carbon services companies, so developers, verifiers, traders. Swen from Europe will then be based in South Africa, and that builds an exportable expertise for the continent. A thriving carbon market here would also mean that South Africa is not just meeting its own net zero commitments, but it's exporting credible expertise and solutions to the rest of the world.
Perfect. And maybe before I close off with you, Shaun, Marike, if you can explain, and I guess Shaun's also been speaking about Swen, this entire who is what have you? Could you explain who is this Swen?
I don't mind jumping in, but I think Shaun could probably explain that to Sven specifically. So when a company like Fibon funds a renewable project under a PPA, the process of generating these carbon credits through Vera works in a few key steps. So first, there's the project registration. So that renewable energy project is documented, it's submitted to Zera under the VCS or the Verified Carbon Standard, and that includes lots of detail around the location, the technology, the expected emission reductions, and the monitoring plans. And then the next step is validation. So that's when you get your independent third-party reviewer, your auditor, your Sven, and they look at the project plan to make sure it meets all the rules and regulations, and it's an actual project that is actually reducing carbon.
Okay, perfect. Okay, fully understood. So Swen is basically the auditor making sure that everything is credible, everything is above board, and kind of gives that level of transparency and comfort, I would imagine, then to the buyers of these credits, because at the end of the day, you want to know that if you've bought this carbon credit, you haven't bought a dud. Shaun, to hear from you, and let's imagine that you had a direct line to the president, and we know that political will is very essential to be able to unlock a market at this scale. So if you had the president's ear for 30 seconds, well, not 30 seconds, actually, I think you need a bit more time, but if you had the president's ear, because it's such a complex topic. So let's say if you had the president's ear, what would you urge him to prioritize in order to unlock South Africa's carbon economy?
I actually made a note. I'm going to read it because it's quite a story.
Okay.
So no, I'm kidding. So I think the question would be, Mr. President, I think we're sitting on a gold mine of carbon opportunities in this country, and I think Marike certainly alluded to it as well. And I think we have a coal heavy grid, which means every renewable energy kilowatt that's created is most valuable for carbon credits in the world. And I think right now for SMEs, farmers, big business operations, etc., it is going to become more complex, and the cost is higher and higher to do business. And in order to really jumpstart economy, we need clear policies. And I think unlike jobs, investments, export, we need there's three key things that we need to really prioritize. We need to fast track a national carbon registry. I think that's hugely important. And I think if that absolutely has to align with international standards, because we do not, under any circumstances, want to be caught short around double accounting or any of those, or even remotely introduce doubt in carbon buyers' confidence in our product here. We need to simplify access for the smaller players. And I think it's partly the reason why aggregators like ourselves exist. So ordinary South Africans can also kind of benefit from it, and not just the big corporates. I think it plays a role through the whole value chain. And I think obviously, ultimately, the last part, which is linking carbon credits to export competitiveness and using something like the CBAM, not just necessarily as a negative in this case, and you combine that with the Carbon Tax Act to really kind of pull some levers to drive investment into cleaner green energy and carbon projects in general in South Africa. And I think with a political will, South Africa could become a really kind of a force to be reckoned with on the continent when it comes to carbon credits. So that will really kind of be my push. Create those three things, and we'll see revenue created, jobs, driving climate leadership on the continent. So that would really be my little whisper in his ear would certainly be that.
Thank you so much for that. And maybe also just from you, Marike, in terms of what you would say if you had the president's ear.
I also wrote down my question, and it's very similar to Shaun's actually. So I'd say, Mr. President, the single most important thing here is clarity and trust. So we need clear, consistent rules for carbon markets that align with international standards, and we need government to create an enabling environment rather than adding red tape to the situation. If you can give business and investors certainty, South Africa can unlock billions in investment, it can create jobs, and it can position itself as a global leader in the carbon economy. Echoing Shaun's sentiment there.
Awesome. Hopefully the president watches the podcast. We'll try get it to him. And that brings us to the end of this episode of Energy Conversations. Marike, Shaun, thank you for sharing your expertise, your insights, and your vision. Today, we unpacked the role of carbon markets in South Africa's energy transition, and we explored how verified credits, policy certainty, and innovation can drive both economic opportunity and climate resilience. To our listeners, if this episode sparked your thinking, share it, follow Energy Conversations, and help shape a carbon-smart, inclusive energy future. Until next time, let's keep the conversation going. Thank you for joining us on the Energy Conversations podcast, powered by the African Energy Leadership Center at the Wits Business School. Together, we are committed to empowering communities and fostering meaningful dialogue around the South African energy sector. Remember to subscribe and let's shape South Africa's energy future together.